Welcome to the Couple Money Podcast, where we discuss building up your marriage and your net worth. Here's your host, Elle Martinez.
Happy Friday. For this edition of the podcast, we're discussing investing, doing it effectively, efficiently, and within your values. Is it possible to do all three? What are some options currently out there? Today's guest is Hardeep Walia, founder and CEO of Motif Investing. Since 2012, Motif Investing has grown by offering investors the ability to use your insights and invest in flexible themes and ideas at cheaper costs than what's been previously done. As an innovator in the fintech sector, I thought you'd be interested in hearing his thoughts so you can decide if this is something you'd like to include in your investment plans. If you're investing for retirement, you're probably looking for a few things. You want your investments to grow over time with some reasonable consistency. You want to minimize costs so more of your money is working for you. And since you're going to live off of this, most people I know don't want to see their portfolios fluctuate year to year. It's very stressful. And that's where diversified investments can protect you. While the stock market as a whole has risen in the long term, I'm sure you've seen the news where individual companies, their stocks have tanked, or one sector had a bubble that burst. And these can be drastic. And if you're close to retirement, it can really ruin things. But when your investments are spread out over different sectors and asset classes, you minimize that volatility. But buying a ton of stocks can be incredibly expensive. And those commissions, they may help the brokerages, but they're not helping you. One solution for some is getting mutual funds. You might buy one and bam, you are now diversified. You have several hundred investments in a sector or even something larger. But with actively managed funds, you're paying for a fund manager, and those costs can add up through the decades. Another concern is when they are put to the test and compared to index funds, actively managed mutual funds tend to fail. Now, I've mentioned index funds and how they can help your portfolio. I've talked about them being a practical solution for couples because you get this diversification without having the headache of tracking a ton of companies or spending a lot of money with commissions. And since most of these funds are passively managed or automated, they typically have less fees than an actively managed mutual fund. But is there a way for you to take advantage of diversification and tap into your insights? No, I'm not talking about stock picking and going on hunches, but using your expertise and invest in what you know and what matters to you. Hardeep Walia makes a compelling case in our interview coming right up. Thank you so much for coming on the podcast. I am so excited to talk to you about Motif Investing and what you guys are doing.
Well, thanks for having me.
Since Motif is considered an innovator and disruptor, do you mind describing what makes it different compared to other options in the investing industry?
So Motif is an investing platform where you can almost invest the way you think. So we stumbled across this idea a while back where people can express what it is they want to do, but they have a hard time actually acting on it. And so what we do at Motif is we take investors' expressions and we turn them into actionable investing. And so I might want to invest in drones because Amazon will deliver packages one day via drones. I might want to invest in undervalued stocks, or I might want to invest in a certain style like an Ivy League endowment manager. And what we do at Motif is we take those expressions and make them actionable by turning them into what we call a motif. And a motif very simply is a basket of stocks that are intelligently weighted to give you access to this expression. And you can purchase a motif of 30 stocks for the cost of a single stock transaction, $9.95. You can dollar invest, put as little as $250. You can put $1 million. It'll still cost you $9.95. And our customers like to think of Motifs as customizable, no-fee ETFs. But they're not ETFs.
In case you missed episode 19, ETFs are essentially index funds that are bought and sold like regular stocks.
So one of the powerful things about Motif is what you see is what you own. And so if you have a climate change motif that you want to invest in, but feel like you want to tweak it a little bit, change it, you can go do that. And it's taken our PhDs, it took them in our first year, a year to build about 100 of these motifs. And then one of the things we did is we realized a lot of people have insights. Someone like my father, who may not be an expert in investing, he's a retired vascular surgeon, knows a lot about minimally invasive surgery. And so he built his own motif. And what we started to do is actually allow people to build their own motif and share them with our community, with about 200,000 investors, and actually collect a royalty if someone else buys that. And then in the first year, we had 85,000 motifs. I think they're now north of 180,000. To contrast that, there are about 7,000 mutual funds in the United States, right? So the power of Motif is this ability to see something, act on it, to express it. I'm worried about inflation. There's a motif called Worried About Inflation. And it's designed to make investing intuitive, simple, transparent, and low cost.
Speaking of fees, costs are a huge concern for many investors. How were you able to get these fees so low for the motifs?
Yeah, no, I think we've spent, we're based in Silicon Valley. We're a technology company. My background is I was at Microsoft forever prior to starting Motif. And we've used technology to commoditize costs, right? We use algorithmic models to bring down the costs of trading, and then we pass those to our customers. And I think that's something that, everyone talks about the compounding of returns, but it's the compounding of costs. That's something you can control, and that's why the cost equation is really, really important when it comes to investing. And we have products out there. We have a product called Horizon, for example, for the newbie investor that doesn't know what exactly they want to invest in. That product is completely free. We don't charge management fees. We don't even charge commissions or rebalancing fees. We do all of that for free. And we do it as a way to just welcome people to the world of investing, because it can be quite intimidating if you don't know what you're doing. And we are also a social platform, so you can bring your friends, your family members, and start investing privately together, sharing with one another. My wife and I do this often because I travel quite a bit, and we want to talk about what's going on. We want to talk about our IRAs. And this is just an easy way to have a discussion about investing, but then once you've decided what you want to do, to actually act on it together, being very, very transparent and being very low cost as you do it.
What advantage would you say there is investing in motifs maybe versus investing in a mutual fund or even an index fund?
Well, I think there's three big advantages. One is cost, right? And if you take a motif and you plot our performance against a traditional fund product, we outperform, usually because our weighting methodology is smarter, but also we have a huge advantage on fees, right? Funds can cost over 1%. The ETFs can be in the 55, 65 basis. And when you compound those products over time, the costs, they eat away at your returns. So we don't have those ongoing fees. So that's one advantage we have. The second advantage is this notion of, do you care about what you're invested in, right? And if you really care and want to know what you're invested in our products, what you see is what you own. In a mutual fund, they only disclose 4 times a year what they hold, and that's not in real time. And if you don't like what they're investing you in, you can't change it. And that's the third benefit. You can change what you see in a motif, right? So if you're a green investor and you want to invest in things that are environmentally friendly, right? You buy a mutual fund, you actually don't know what's being held at any particular time. And if you don't agree with a fund manager, you can't do much about it. And for a motif, you can go in. So my wife and I love her dearly, but we have very different values on certain issues. I grew up in oil country. She really is passionate about the environment. And so we can have the same risk model, the same asset model, but she can take carbon out of her portfolio, and I can actually overlay carbon into my portfolio. You can't do that with any kind of fund product, and that's the advantage. And if you do try to do something like that, you'd have to buy a green fund, and then they charge you even more fees. I don't know why. So think about fees, think about transparency, and think about the control, the ability to change things. And we've put tools out there so you can manage the motifs in an asset model, right? So you can buy multiple motifs. You can buy a motif for each asset class. You can do some really powerful things with motifs. But the big advantages stem around those three issues.
You guys have a huge community on that site. Now, was that planned from the beginning, or did that come later?
That was planned from the beginning. We did launch with it. What caught us off guard was we didn't expect that many people to start building their own motifs. And the big epiphany that came after we saw the data was that, think about it, everybody knows something about something, right?
Mm-hmm.
A dietitian knows about healthy lifestyles. A doctor knows about a certain medical technique. An oil and gas worker knows about oil and gas. And what happens to a community when everyone, takes their particular expertise and puts it together in this community? And that's kind of what's driven a lot of people to build motifs, to get the confidence, because they start by using something they know. And one of the things that we realized, and there's a funny story. So about I think 18 months ago, we did a competition. We got all the different clubs from the Ivy schools to build a motif and manage it over a certain time period. My alma mater, Yale Wharton, we're competing too.
Mm-hmm.
And it was interesting to see which school was going to win the prize. And then one of the funny things is a reporter called me out of the blue, an Associated Press reporter, and said, have you been to Fargo, Hardeep? I said, no, I haven't been to Fargo. He said, do you mind looking up these two motifs? So I looked them up, and I said, these are really smart. They're well thought out. Who built them? He's like, how are they doing against those college kids? I said, well, they're beating them by 8 or 9 percentage points.
Ooh.
And he said, well, you know what? I want you to come to Fargo, North Dakota, and tell me why these 11-year-olds are beating Ivy kids in an investing competition. And when I went to visit these kids, it was this notion of really understanding what you're investing in, and they got together as a team. They talked about things they understood, and it was interesting how they very simply could put portfolios together. And there was some luck involved in it, but it was smart in terms of looking at how they were taught by their math teacher to worry about costs, to worry about trading, and it was actually a fun way to learn. And so this notion of investing, I think you start early. I start with my kids. I have 8 and 6-year-old girls, and we start the discussion early about investing, and it doesn't have to be intimidating. I think one of the biggest things I wanted is I want people to learn from losing money just as much as they learn from gaining money, because the emotions that go with that are very, very important.
Mm-hmm.
But I think some of the rules of investing are pretty consistent, right? Know what you're investing in. And people call us kind of Peter Lynch meets Jack Bogle, right? There are investing insights. You can do it. And one of the luxuries of our platform, if you want to be a set it and forget it investor, there are products there for you. If you've got ideas on how you think about investing and you want to put them to work, we have that too. And so we've got a very broad range of customer base.
Special thanks to Hardeep for taking the time and being a part of this episode. If you want to find out more, please visit motifinvesting.com. If you like what they're doing and you sign up for an account, could you please let them know you heard about them on this podcast? It'll be a huge help to the show. Join us next week when we get into protecting yourself from scams and fraud when shopping online. We'll go over the 5 most common e-commerce scams, as well as some up-and-coming ones you need to be aware of. If you haven't already, please subscribe to the podcast so you can get that episode and all others as soon as they're released. It's free and easy. We're on iTunes, SoundCloud, and Stitcher. The feed is also available on couplemoneypodcast.com, so you can get it on whatever service you prefer. I hope you have a wonderful weekend. Take care.